Hello everyone, Mo Zulfikar here with another episode of the 5 Minute Show, where I try to break down an investing economic concept within 5 minutes. Today, I want to talk about the most important indicator for the stock market right now. But before I go into any details, check out zulfikarresearch.com and make sure to go to the trade ideas page. I just launched two market intelligence publication that are, for active traders and long-term investors. Now, let's talk markets. You see, not too long ago, a well-known Wall Street analyst said something that really stuck with me. And he said, don't bet against the White House. The analyst was Tom Lee from Fundstrat. His argument was very simple. He said even if economic data looks soft, the administration still has enormous influence over the stock market. They can pick winners, shape sentiment, and even signal confidence. And to be fair, there is some truth through that. Today, I want to take that idea one step further because I think there's one indicator most investors may be ignoring, and it might be one of the most important indicator for the stock market right now. All right, let's be honest. This Trump administration hasn't exactly been, subtle about the markets. We've seen moments where, comments from President Trump alone moved asset prices. Remember back in April 2025 when President Trump said it was a great time to buy, and that was a bottom of the, this falling market we had, and it was vigorous market to say the least. You remember those crypto pumps? The thing is, sentiment flipped almost instantly, and that tells you something. Markets are not just trading earnings and interest rates; they are also trading confidence and political noise. But here's the most important part most people miss. If you really believe that you shouldn't bet against the White House, then you should also ask yourself what happens when the White House starts losing public confidence. And I say this because, in my view, presidential approval ratings may be the most important stock market indicator as we speak. Again, I'm not a pollster, I'm not a political junkie, but markets are forward looking, and approval rating are one of the cleanest real time measure of public confidence in leadership and economic directions. And that confidence really matters. Now, let's talk actual numbers because this is where things start to get interesting. Right now, over 55% of Americans disapprove of President Trump, while only 42% approve. Compare this to the same time last year, only 40% disapproved and 51.6% approved. And that's not noise, that's a meaningful shift in sentiment. Yes, I know polls can be wrong, but over time, the trend matters a lot than anything else. And right now, the trend is clearly moving in the wrong direction when it comes to approval ratings. And with midterms approaching, falling approval ratings can create pressure, pressure to deliver, pressure to stimulate, pressure to support markets or at least appear supportive. But pressure also creates risk. Now, let's zoom out a little bit and look at history because this isn't the first time, we're talking about approval ratings and markets. How does it all work? Historically, stock market performance has varied widely under, different presidents. Some administration oversaw strong multi-year bull markets, other persisted over flat or negative returns. But what's interesting is this, markets don't require high approval rating to perform well. In fact, historical data shows that when presidential approval rating is, between 35% and 50% range, average stock market returns are actually stronger when approval, was extremely high. But here's the key point. When approval ratings fall sharply, it usually doesn't happen in isolation. It often coincides with, slowing economic momentum, rising uncertainty, policy instability, or valuation stress. And that's when markets starts to wobble. Approval ratings don't cause markets to move, but they often reflect conditions that eventually do. Now, the big question, can President Trump's approval ratings decline further? Which is possible given, the political, geopolitical, and legal entanglements this administration is dealing with at the moment. And with that, we have to ask, will the stock market and more importantly, the winners continue to perform? Now, let's bring this back to reality. If you are a long-term investors, you can't trade every headlines, and politics is a lot of times noise, and markets will eventually outlive every administration. There are thousands of publicly traded companies across North America, and great businesses can compound, regardless of who's in the office. But ignoring sentiment and valuations entirely, I think that's a big mistake. Market currently cares about political ratings. So if you are a trader, if you're an investor, you should be looking at it. Yes, approval ratings are important. That's what market cares right now, but that's not the only thing you should focus on. There are other factors you should keep in mind as well. As it stands, valuations are, relatively high compared to historical averages. As I said earlier as well, the economy is getting softer, and there's a lot of this time is different mentality going around. And usually, when that happens, risks are being, ignored. Look, mean reversion is real, and the higher the valuations go, the more painful that reversion tends to be when it finally shows up. Nobody can tell you when the stock market will crash or anything like that, but you have to keep that in mind. You as an investor, you can't just ignore the big picture. Yes, right now the market cares about the approval ratings, but you also have to keep in mind what happens when the approval ratings crash, because there's a possibility of it. And when that happens, below 35%, you start to see some bad things happening to the stock market. I wrote about this on zulfikarresearch.com. You can find out more there. So, in the end, if you're asking what's the most important indicator of the stock market right now, it might not be earnings, it might not be interest rate, it might not be inflation, it might not be the Fed, and so on. It actually might be, approval ratings of, president. The trend at the moment looks like is declining, but don't forget, fundamentals still matter. And do not confuse political support with permanent market support. If you like what you saw, like the video, subscribe to the channel, and check out zulfikarresearch.com. I recently announced two new market intelligence publications. If you are a short-term trader or a long-term investor, there is something for you, so check it out. Thanks for watching.